Dan, get in here. I want to hear from you whether and how people should be positioning for an eventual pause.
Well, to start with, Liz, when is there going to be an eventual pause? People have been calling for this for a long time. Now, all of a sudden, it's going to happen. Yes, inflation is cooling down, so we're saying, hey, maybe the Fed will finally get the message. But, you know, the way I read Jerome Powell, he's not really giving any indication that he is going to pause. He keeps saying, and I believe him here, inflation is still not under control. It's still unpredictable. I think they're going to go for a miss by going way past where perhaps they should, because they're concerned what happens if we take our foot off the gas, right? And inflation spikes again. Then he really looks bad. So I'm not so sure that this pause is a guarantee by any stretch.
I know, but shouldn't investors at least start to prepare for a pause, Dan?
Well, yes, eventually the pause will happen. And yes, investors are going to have to look at that and say, okay.
How?
Well, for me, the way I look at this, I really like what's going on in the energy sector. I said before when I was on the show, I really like Chevron. I also really like utilities. I think that's a great place to be based upon dividends, based upon value. That's where I would be positioning myself right now.
Both Chevron and PEG, which you like, have 3.5% dividends. Scott, the problem with energy, in my opinion, is if they pause, it's because we are in a recession or heading right into one. And in recessions, people use less energy, don't they?
Absolutely, they do. And yeah, we're coming into, high season, high driving season. But I think you have to look at the energy sector as what we've done basically over the last 6 or 12 months. And we've had these very defined ranges, not only in the price of crude, but in the price of a lot of these stocks, where we have seen just this, it'll hit a bottom. Let's take a Chevron, for instance, at 164-ish or so, and then a top, maybe around 180. Or you look at Marathon Petroleum, same type of thing. You've got 128, 140. So we've seen some really defined ranges. And for me anyway, rather than looking longer term, I'm going to continue to play those ranges until it doesn't work. Over the last 6 to 12 months, it's worked beautifully.
Well, over the last 6 to 12 months, Dan, piling into shorter-term government bonds has been wonderful. The T-bills, 6-month, 4-month, they were yielding 4 or 5%. As we look at the 10 and the 2 right now, still kind of calling for that recession number, but are bonds still a place to be? And if so, at which levels?
Well, listen, if you're going to be in bonds, I think now is a time where you got to look at that more on the short term, because I do think the market is going to be turning. But keep this in mind, too, Liz. What's going to happen when we start to feel the pain of what OPEC Plus is doing, right? Because
cutting.
Yeah, exactly. So now I think that we're going to have a boost in energy costs, which goes to the point of, will the Fed actually pause? Because if we're going to have higher fuel costs, we are still going to be dealing with inflation. Inflation, recession, take your pick.
Hey, it's great to see you both. And the Dow holding on to gains of 385. Some surprising revelations